Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Ethereum and its token ETH. None of the content is financial advice. We'll be conducting machine learning based price forecast, regression analysis, and accumulation strategies, as well as estimated bull target for Ether. Let's start with the today's news related to Ethereum. Has been pumping a lot over the last 24 hours, about 7% compared to Bitcoin pumping at around 1% or so. Sol less than 1%, BNB about 2%. So comparatively speaking, Ether has been doing well over the last 7 days. And per the token, per the market cap based ranking, it's ranked number 2. Quite a bit distance between the number 2 and the number 3, about 1/3 of the Ethereum's market cap at around 340 billion. Volume has been around 10% of the market cap at around 34 billion. Tokenomics staying flat at around 120 million. And if we go to the website ultrasound.money, where Ether's tokenomics and the token burn rate is being mentioned, over the last 30 days about 475,000 ETH were burned. Supply growth at around only 0.5% a year over the last 30 days. If we simulate since merge, the supply growth has been deflationary over the last 2 years and 54 days. The net supply has declined by 0.04%, and the total burn or since that per year is at around 850,000 Ether. Issuance has been at around 800 Ether, so about 50,000 Ether tokens burned since the merge. So supply chain, that is at a yearly level, the net supply chain has been at around 105,000 Ether burned net since Ether shifted from proof of work to proof of stake. In terms of today's tokenomics related analysis, you can see over the last 1 year or so, on a logarithmic scale, the price and market cap chart are essentially the same. Ether has had over the last 7 days slightly significant rally. You can see back from 290 billion to about 340 billion, about 50 billion worth growth. That is, in terms of percentage, 50 over 300 would be somewhere around 15%, whereas price also grew from over here from $2,400 to about $2,800, slightly around 15%. So now that we have analyzed tokenomics, the key finding over here being the price and market cap growing in a linear fashion. That means the comparatively speaking, the growth in market cap gets well reflected in price. That is no wonder, because the tokenomics are actually deflationary, as we witnessed over from ultrasound.money. Now going back to the website that we have, cryptoweeklies.com, where all of the machine learning based price analysis for not just Ether but top 20 over here, and again top 100 in the next table, analyzing their machine learning based forecast, regression analysis, accumulation strategies, and the overall summary and estimated bull target. That's where we'll be focusing rest of our video. The Ether's price action, this is the weekly price action of ETH since about 2017, and this price action has been used to train the machine learning model using ARIMA, LSTM, and XGBoost techniques, and the following are the forecast of the model. The pink line is the trend line, which says that without any bullish or bearish movements, the price trend is up from $2,600 to $2,800. Price is above this trend. This purpose of this trend line is not to tell what will happen in terms of price action, but provide a directionality of whether the prices have more chance of going up or down. Right now, this pink line suggests, which is the fair value output of the machine learning based model, suggests the prices are more likely to go up. This one standard deviation bull case for Ether for this week was at around $2,773. As you can see, the prices are above this level at around $2,800. That means for this week, the one standard deviation ceiling has been taken out. That means Ether is in a euphoria phase where this 2 standard deviation ceiling makes the most sense. That ceiling is coming in at around $2,900, around almost at $3,000. You can say $2,993 to be precise. If the euphoria phase were to go back to a mean reversion, and again euphoria lasts for several weeks or month, you can see you could call this move from October 2023 till about January 2024 of a slight euphoria phase, but you can see that the angle of incidence or for this move is quite similar to the one standard deviation bullish case forecast in this yellow line. That means the major euphoria phase for Ether happened the last time was back in December 2020. Again, this would correspond to 4-year, if you believe in the 4-year cycle, that would be December 2024. At that time, the price in the month or a week of December 27 grew from $626 till about 2x in 2 weeks to the 10th of January of 2021 at around $1,200, from $600 to almost at around $1,200. So those are some of the euphoria phases in the market. Again, we haven't seen those kind of euphoria phases for ETH since about late 2020. So if we believe that instead of that kind of a euphoria phase based rally, we get a rally similar to October 2023, end of October 2023. So in that one standard deviation scenario, even though there are some instances where the prices go up in a euphoria or in a straight up manner, but then again the rally kind of subsides, and then incrementally the price incrementally grows for a couple of months again, or couple of quarters. In that one standard deviation bull case for ETH, the prices range between $2,700 to about $4,380. So almost between the previous all-time high at around $4,700, slightly below that previous all-time high is forecasted between now and middle of April of 2024-5. In terms of the bear case, if the prices were to go down due to some macro indicators or macro narratives such as the recession or any bearish sentiment in the crypto market, the one standard deviation bottom for ETH is between $1,700 and $2,400. So if you want to look at it in a tabular format, the week by week base case and the bear cases are available on the bottom of the chart. The base case is this column in the middle. To its left are the 3 standard deviation bear cases, to its right are the 3 standard deviation bull case. And week by week, to interpret this data, it's for this week the likely price action was at around $2,600, the one standard deviation ceiling. That means there was a 68% chance that the prices stayed between $2,560 and $2,773. That hasn't happened. That means the prices have rallied beyond this $2,773. That means there is 95% chance that the prices don't exceed $2,993. So that's how you interpret week by week. At this point, as the prices are between the bull case at 68th percentile and bull case at 95 percentile, it makes sense to look at both the bull case for the next week at 95 percentile as well as the 68th percentile bull case, and that price action is between $2,900 and $3,283. So that's the forecast for the next week. Again, and the prices tend to not stay too long in the bullish 95 percentile bullish or 2 standard deviation bullish phase. So anywhere between $2,556 and $3,283. That's the forecast for the next week. So for ETH. So with this, we'll focus our attention more towards the regression based valuation for ETH right now. The fair value of ETH per this analysis. Let's get rid of the other bands which are not that helpful at this moment. Let's focus on the fair value. This is the polynomial regression based analysis of Ether's fair value, where the fair value goes up in a non-linear fashion during the bullish phases it goes up, and during the bearish phases the fair value goes down, the regression based fair value goes down. In terms of the current fair value, that is at around $3,900. That means Ether is undervalued by about $1,200, somewhere between $1,100 and $1,200 at this point in time, and that would represent a rally back to the fair value. Right now the prices are close to the 1 standard deviation bottom. In the larger scheme of things, you can see that the prices rarely spend any time outside this green line. They only spend some time during the bearish phases of the market, and during the bullish phase the prices tend to mean revert back to the fair value and also go slightly above this 1 standard deviation peak. The last time ETH went slightly above this yellow 1 standard deviation peak was back in March of 2024. Back then the 1 standard deviation peak was at around $3,400. Prices went to about 38, 3900, almost 2 to 4k level. Right now that 1 standard deviation ceiling for ETH is at around $6,308. That means $6,308 ETH would be as overvalued as ETH was back in March of 2024. To interpret this, the key levels to watch are about the first is prices don't go below the $2,400 level. That is key. Then the rally back to the fair value at around $3,900. Those are the first two key levels to watch for this regression analysis for ETH. We do have one more analysis where Bitcoin and ETH. Will focus more on ETH right now, and how ETH is doing on its SMA pair, that is against its 20-week moving average. How risky are the current move of ETH with respect to 20-week moving average? Right now the risk associated with ETH is only at around 37%. That means kind of low risk compared to what ETH did back in March of 2024 when the prices were close to 4k at around 75% risk. The key idea is whenever the prices are in this low risk interval, that's when DCAing in the market makes most sense, and when the prices are in this high risk interval, then DCAing out of the market makes the most sense. So that's where the ETH risk is. In terms of now accumulation strategies, again we'll spend analyzing this SMA model that we discussed over in the previous chart, and applying that framework to the daily price of ETH, and this is price of ETH color coded based on the risk levels, based on how it is doing against the 20-week moving average. The key idea over here, you can see whenever the prices are in this low risk regimen, you can consider anything below 0.4 risk at low risk, and essentially again at between 0 and 0.1 risk. Back in June of 2022, the prices were in that territory. That was the best time to accumulate ETH. Right now again as late as October of 2024, that's where the prices were again at around $2,300 at some of the best time to DCA ETH. Right now the risks are between 0.3 and 0.4 at around 36% risk. That means 64% reward at this point in time. And if you were to apply this risk reward logic to get some expected value at some key risk levels, this model considers price under $2,700 as close to zero risk based on the recent move of Ether, and especially since and the price is between let's say some key risk level at 25% risk per this model going forward. Again, this forecast only 20 weeks into the future. At around 3300 Ether at around 3300 would represent 25% risk. Essentially prices above 4200 at around 4200 level would be considered high risk at around 60% risk, and the eventual 20-week based top at around prices at around 4600, and between that level and $5,130. So that's the SMA based expected value based forecast. Now the dollar cost average based models, the model which resembled the regression based analysis for ETH, you can see this logic has been applied to the daily price action of Ether, and per this model again you would find a similar fair value at around $3,900, and based on the relationship between the price and this fair value regression line, this and using the proportional and time adjusted multiplier to that distance and between the price and the regression band. That's where these risk levels are found, and using those risk level, the price is color coded based on how risky it is to accumulate ETH at this point in time, at any point in time. So per this model says that right now the risk associated is at around 20%, 21% at price at around 2800 for November 7th. Per this model, again, this is a very conservative model. ETH priced below $1,700 is considered close to zero risk. No, there is no such thing as zero risk. This is rounded off to zero risk. Per this model, prices above $5,200 at this point in time would represent a overvalued ETH, and this model does a fair job to forecast what ETH could do in a high risk environment. Prices above $8,000 and $9,600 would correspond to some of the 2 standard deviation peaks that ETH has witnessed back in the bull market. Again, ETH has a tendency to overshoot that peak. That's something that we have incorporated from this analysis. You can see in the future, if the prices were to go meaningfully up, the 2 standard deviation band could be somewhere between $11,000 ETH and $20,000 ETH. Again, we don't forecast that further out into the future. We do keep on making videos related to ETH once every month, in the bull market more so. So hope you enjoyed this content. If you did, please subscribe to the channel. Also give this video a like. Before we conclude, I'll present the time weighted average price model, which represents ETH and its current price based on the difference between the price and the time weighted average price in this line blue. The key idea is whenever the price is below the blue line, that's the best time to DCA. Back in June 2022 and in December 2022, the price did go slightly below the time weighted average price based blue line. Right now, the risk associated with ETH is, accumulation is, per this model, is around 55%. If we go to the estimated bull target and use a weighted model based on the 3 models that we discussed for accumulation, the regression model says 17% risk, time weighted average price is just that we discussed 46% risk, SMA model says 30% risk, weighted risk is at around 28%. We based on the expected value based on the latest price and the weighted risk, the bull run peak estimated by the model is at around 9,676, quite close to the DCA model that we just discussed. And in terms of the reward from this latest price till the bull peak, that is around a 3.4x in terms of the price movement between bull peak and latest price. So that's the conclusion. Again, there is no financial advice in this video, but that is how we see ETH performing. Hope you enjoyed the content and hope to stay connected, and hope you have a nice day. Bye bye.